Hello, this is Luke Smith, and we're answering questions in the school community. We've got about 400 people in the school community right now and growing that are like minded people that love high traffic retail properties and figuring them out. And so we share notes and we learn from each other. If you're interested in that community, please follow the link that's in the description of this video. Back to the school community, there's a bunch of free resources, free information there, and I do live presentations along the way, answer questions, and teach and share and tell. And I love doing that because I learn from you guys as well. So please feel free to jump in there and join us on this journey. Brian, what kind of questions you got today?
Yeah, we got three questions here from Braden. And the first one is, how much earnest money are you often putting down on these types of transactions?
Yeah. So how much earnest money are we putting down on these transactions? So this is Braden. I've done this a couple different ways. I've tried earnest money. I'm a data guy, right? And so I like to test and I like to keep track of notes and see how it works. And so I've done earnest money of $50,000. I've done $45,000, 40, 35, 30, 20, 20, 15, 10, $5,000, $2,500, $1,000, $100. I've done all different ones. And when I make offers on properties, lots of times people kick back if it's, $2,000 and $5,000. Lots of times they'll accept it at $10,000. Sometimes they'll ask for 15 or 20. If it's $50,000, sometimes they ask for $100,000. If it's 25, sometimes they ask for 50. So I think I think the stack of earnest money on these kinds of deals tends to kind of fall closer to the $10,000 number, and 5,000s work a lot of the times too. And these are refundable earnest monies that if the deal, if you don't figure it out along the way, you're asking for the money back and going on your way. So I like to keep these funds closer to numbers that would be not in the big courts, but in the little courts, the smaller courts, the small claims courts kinds of numbers. I think it just keeps things easier. Not that we're looking for fights or anything, but I think it just makes more sense. And in reality, the claims that people have for keeping earnest money on these kinds of deals, if you've ever tried to keep earnest money on properties, are really down to the hard costs. You really have to detail, if you're going through the case, what your hard costs were. Like, did you pay for a surveyor? Or did you pay for these things? Did you pay for cancellation fees? Did you pay for title fees? Did you pay for things at closing? Those are hard costs. And so even at a $10,000 deposit and somebody wants to keep your $10,000 deposit, they've got to make a case of what their hard costs were. And you should pay them for those hard costs. And then the rest they should still give back to you, even after the refundable periods in these contracts. There's a lot of case law and examples of that in the marketplace. I'm not an attorney, just reading them and studying them and watching them. So I think it comes back to that $10,000-ish number for a lot of these kinds of deals. And it's open for opinion for the buyer, seller, and all kinds of different people to negotiate back and forth on. But it seems to be those are the common numbers.
Yeah, sure. And I just wanted to say this is in the context of high traffic commercial land for
Yeah,
QSRs.
not $5 Desert Square or $1,000 Desert Square or something, right?
Yeah. So
Uh-huh.
the next question is, are you leveraging option fee structures?
Yeah. Are you leveraging option fee structures? No, I'm not. In these kinds of transactions, I'm not giving them option money to get time to work on these properties. I've tried to sell a lot of these high traffic retail properties that I've bought in the past, and they can be really hard to sell. They're really hard to sell until you find a tenant. And without a tenant that is going to be the end user of the property, these properties are a project to go figure out and make happen. And a lot of people don't have the specialty, the time, the wherewithal, the attention, whatever, to go make these properties into what their highest and best use is. And if you've got the time and energy to go figure these properties out and you take a piece of property, I think I had an example here, just a classic piece of dirt on high traffic road, and you figure out what shop goes there. Let's say it's a McDonald's. You get a McDonald's to go on that property, and McDonald's who love it and go sell a bunch of food through that property and coffee and everything else. They can pay rent, and the the brand name in McDonald's sells really well, so they don't even have to pay that much rent to get the valuation to go crazy and get the value of that property to go something much higher than the vacant piece of land. Telling the owners that you're going to go find the tenant and put the tenant together and build a shop for them, or lease it to them and have them build the shop for themselves. You put that deal together, brings the end tenant into the property and changes the value. It's a total value change proposition that you're doing to the land. It's going from a vacant piece of land that nobody knows what to do with to a vacant piece of land that McDonald's wants to build their shop on. There's a bunch of people that would like to buy that off of you, and at the valuations of how much McDonald's is paying in rent. And you can buy it from the landowner or what they're selling the vacant land at, and you can sell it to somebody else that likes to keep the McDonald's for how much McDonald's is willing to pay in rent for that property and keep the difference. That's a huge value add to this property. And explaining that to the landlord and asking for the time to put that together and work on that and make that happen is a very logical explanation to have. It's an open conversation that the landlords would love to hear from people. I've been the seller of vacant, high traffic retail land, and it's hard to find somebody that can show up and do that to your property on a consistent basis. And so the landlords love to hear that. They love to do it with vacant building. They love to do it on vacant land. And if you specialize in one particular tenant or one group of tenants, it makes it that much easier. You can tell them the kind of tenant you're trying to get. There's a coffee tenant or a chicken tenant or a burger tenant or something, a tire tenant, and you can go make that happen. And there's a lot of people in the markets that specialize in their particular tenant or their group of tenants and go make these properties happen. But it's really hard to get their attention to work on your property. And so there's a bunch of these properties that are marketed in the marketplace for years and years and years, looking for somebody to come figure it out, fix and make their property happen. They love to hear from you, and you can ask them for a reasonable amount of time to go work on that property and figure it out.
Last question is, what do typical timelines look like working with these national brands?
Yeah, it's a good question. Some of the guys in the industry doing coffee shops are talking about 5 and 6 months, 4 months, 5 months, 6 months kinds of turnarounds. And they will get a property like this one we got on the screen here, for example. They'll get it under contract and they'll go talk to Dutch Brothers. And Dutch Brothers will say, yeah, we want to put a coffee shop here. And Dutch Brothers will say, yeah, you got to pay for it. You got to build it. This is how we want it to look. Here's the shape and go dance to our tune, but you put up the money and build the thing, right? And so they do that. They do the geotechnical or the civil work. I mean, they figure out the property, they figure out where the Dutch Brothers building is going to fit and how the flow of traffic and the parking and how it looks up to the streets and everything. They pay a civil guy to do that. And they pay a design person to put the Dutch Brothers design in there, and they go get the permits and they pay the tap fees. They pay to hook up to the water and the sewer and the impact fees to get in and out of the road and the permitting to get the permits to build the thing there. And some of them will sell it right there with everything put into place without touching a blade of grass or without picking up a shovel. They'll go sell it. Other ones will have the money or raise the money to build the property, and they'll build it out and they'll deliver it into the markets. And if they're delivering it into the markets, they'll sell it 2 to 3 months. The brokers will start taking the listings to sell the properties to just before the rent's being paid. And so investors will come in and they'll bid on that property that the rent's just about to be paid on, and they'll take off with it triple net style as an investment, so they can own it and collect the cash flow from there. They don't have to put any money in to build it or anything like that kind of investor. And that's like top market prices. They're selling it into the markets. And those guys are doing that from buying the land, not getting it under contract, but they'll get it under contract. And then when the money goes hard, they're buying the land to getting the permits and getting it built and handing it off into the markets, 4, 5, 6 months. Those kinds of timelines are happening right now in the coffee shops. The same kind of thing is happening in QSRs and others that are longer, that are not 5, 6 months or 12 months or 18 months or something like that. But those are timelines that are happening. Dentist shop I was negotiating on this morning. We're just talking about that right now. We're January 28th, 2026. So first quarter of 26, we're talking about doing delivery in second quarter of 27. And if I can get it to go faster, I'll get it to go faster. But we can do dentist shop on one side, QSR on the other side. You can put the dentist on the right and the QSR on the left. So the left can have the drive-through. And yeah, talking to the civil guys, talking to the design guys, and looking at the numbers of the GMs, I would say it wrong, the builders. I mean, it's just looking at all their timelines. I think we can happen faster than that in this particular market. It gives a bunch of room for error, and go market it along the way and sell it along the way. Either sell it when we got the permits in hand, or sell it when we got all the contracts in hand, to take it to the third parties, or sell it when the rent's just about to be paid. There's multiple different exit points along the way that different class of investors will come in and take off with the project. But basically taking it from vacant land to cash flowing asset, adding value along the way. How far down the pipeline do you want to take it? So that timeline is variable depending on how far you want to go. And there's different partners you can bring in to help you in each piece of that phase. We've got those guys and those people in the network that we can reach out to for a lot of these projects.
So
Brian?
thanks, Luke. So
Yeah,
where do people go for learning how to do these deals on their own?
Yeah. So the link is in the description. It'll take you back to the free community that on school. We've got a bunch of amazing people signed up in there. We can go back and forth. There's live sessions on there. I teach and I share, and I learn too by teaching on a pretty regular basis there. Look at the calendar. There's posts that come by every now and then. Brian puts links in to sign up for interviews to go into the further down the rabbit hole if you want to. There's videos and information to learn more and more set up in that community. But if you want me to hold your hand through these deals, take the next step, jump all the way in, sign up for one of those interviews. We'll make sure that we're on the same page and we're looking at the world the same way, if you will, and that we fit. And we'll go work on these properties together. We can take vacant land, go turn it into buildings lots of different ways by adding a tenant, by adding an awesome tenant. And that adds value that allows us to pull off these deals. So hit the link below in the description of this video. Thank you. See you in the next one.